Smart Silver Stacker here. Hope you're doing well. We've got a lot to talk about today. We have got some signs now that we are being set up for a very big fall in these markets. Indeed, I want to go over some of that data with you today. We've also got some interesting stories surrounding the precious metals, especially gold today. And I kind of want to give you my take on those and what I think this may mean for us moving forward with the precious metals. But first, let's just take a look at the markets here. Let's take a look at what's going on today in the price of the metals and markets across the board, because it's not looking very pretty. I got to be honest with you. We got the gold price coming under some renewed pressure here, down to $1,867. But look, pretty much everything in the red today. All of the major indexes across the board in the red. And I see some folks saying hello in the chat there. Hello, good afternoon, everybody. Welcome. Hey, if you enjoy today's live stream, please do give it a big thumbs up. Don't forget to do that. If you haven't subscribed to the channel yet, consider doing that. All right, back to this screen here. So we have got all of the major indexes in the red, and I got to tell you, this is not too surprising considering what's going on with the markets and the interest rates. The Fed telling us that they're going to keep interest rates higher for longer. This is having an obvious effect on markets across the board here. Even got crude oil today down, gold, silver down. Interestingly, the yield on the 10-year falling a little bit today, but given the magnitude of the sell-off we have seen in the debt market over the past several trading sessions, I think it's completely normal for this to take a little bit of a break here. Oh, not Bitcoin. I want to look at that 10-year yield. Because it's really gotten a bit oversold. So I wouldn't take this decline in the 10-year yield that we're seeing today as a sign that the bond sell-off is over. I just think it is taking a breather, and very likely come next week, we're going to continue to see the yields on U.S. Treasuries moving higher. Now, if you want to get an idea of how much pressure this is putting the banking system under, this is an interesting chart, and it's not one that we've looked at in the past, so I want to examine this. But this is from the Fed, and this is the assets, liquidity and credit facilities, loans, bank term funding program. So the BTFP, the bank term funding program, this was this program, if you're not familiar with it, that was set up by the Federal Reserve back in March when the banks started to fail. And what this program allows banks to do is it allows them to take their bonds, which have lost a tremendous amount of value, and give them as collateral to the Federal Reserve in exchange for loans. And the thing is that, according to this, it's just hit a record high. So, the emergency funding is continuing almost $108 billion now. And while the Fed has loaned out $108 billion to these banks, you have to keep in mind that the collateral that the Fed has received in exchange for that $108 billion is actually, in reality, worth significantly less than the amount that they have loaned out, because they have been accepting these bonds at their face value, the amount you would receive from the bond if you were to hold it to maturity. But because the yields on these bonds is so low, the actual market value, if you were to go to sell those bonds right now, you wouldn't get nearly $108 billion. I mean, it's the whole reason that the Fed instituted this bank term funding program in the first place, because the banks have all these unrealized losses on these. And rather than force them to exit those positions and realize the losses in order to raise liquidity, the Fed is loaning things out to them, but loaning money out to them with those as collateral. So it prevents them from being forced to sell them and realize the loss, exactly like SVB did, which led to its collapse. Now, it is important to note, though, that this is at a record high. So while the Fed and the Treasury and the powers that be, Janet Yellen, they want to tell us that the banking sector is strong and liquid and isn't experiencing any problems, and the narrative is that the banking system now, the fears of a banking crisis have kind of abated. Well, I want to tell you that unless the Fed continues extending this kind of emergency assistance to these banks, it's very likely that we will see a bank failure. And, you see markets across the board declining, banks amongst those things. And, if the 10-year yield and the yield on U.S. Treasuries continues to rise, the losses that the banks have on their balance sheet from these low yielding bonds are going to continue to get worse. And so the Fed is likely going to have to continue to extend this emergency credit facility, quote unquote emergency, indefinitely. In fact, I wouldn't be surprised if we see them expand it in the very near future. Now, before we get into these stories about gold and silver, excuse me, I thought this was kind of an interesting thing. I actually saw Peter Schiff mention this on his podcast. So we're all familiar with the U.S. debt clock, right? I think we've all taken a look at this. If you haven't before, it's just a very cool website, kind of gives you an overview of a lot of the very frightening numbers in the U.S. economy. Now we're at $33.1 trillion. We've got a real deficit annually of about $2 trillion. Of course, if you look at the pace that the debt has been rising over the past month or so, if you annualize that rate, the deficit would be much higher than 2 trillion. It's something like 4, I think, if you annualize the rate that we've experienced over the past couple of weeks and months. But there's a very interesting feature here on the debt clock, which brings up a lot of questions. And that is this time machine aspect here, where you can go and you can look at what these numbers will look like 4 years from now in 2027. And I just have a question for you based on these numbers. So let's just look real quick. This is what the numbers will look like in 2027 if we continue on the pace that we're on. $45 trillion in national debt, basically, just under. One thing that you really want to pay attention to here is the interest on the national debt. You can see that right now, as of today, the interest on the national debt is lower than defense spending, Social Security, and Medicare. It's just under $800 trillion, the way that they calculate it on this site. But if you look, with the interest rates higher for longer and the massive accumulation of debts and deficits, by 2027, on the path that we're on, the interest on the national debt alone will be almost $3 trillion. It will be the single largest item on the U.S. national budget. Now, I've got a question for all of you. Do you think that this world is even a possibility, this one that we're looking at? Now, I want to be fair. If you were to go back maybe 10 years or so and you were to show me the numbers from today, I probably would have thought, well, there's no way it'll get that bad. But I don't know. I mean, this is sort of a watershed moment, I think, when you start to see the interest of servicing the national debt costing more than any other item on the federal budget. But leave me a 1 below if you think that this is how bad things are going to get, or leave me a 2 if you think something is going to break before we get to this level. I think something's going to break, personally. Maybe we do get to numbers like this, but if we do, in an environment like this, what do you think the purchasing power of the US dollar is going to be like? With $45 trillion in debt, presumably more de-dollarization on the geopolitical front. I mean, it's hard to imagine that by 2027, China is going to be trying to load up on US treasuries again. But I've got someone, Silver Commander, saying silver low predictions. Okay, so yeah, look, we're headed towards a massive financial crisis, I believe, in this country. And it's looking like, I don't want to be like Chicken Little saying the sky is falling, but, you look at the amount of emergency credit that the banks are needing to take on being at a record high, and you see rates moving up, and, we've already had a lot of banks fail this year. I do think there's a strong possibility that we may see a significant negative event in the near future. If we do, I do believe that gold and silver will drop. I think that the spot prices will drop at least. If we get a liquidity crisis, investors will be selling everything that they can to get cash and to raise liquidity. So, I think that silver, when you look at the chart, that you will be able to acquire physical metal for anywhere near about that. I do think the premiums will rise. Now, I don't have a crystal ball, so I could be completely wrong about that. I see a lot of people asking about the Costco thing in the chat. So let's go ahead and just skip to that. Now, first, I want to point out I don't buy my gold and silver at Costco. I buy mine at SD Bullion. Right now, they've got some really amazing deals. I think it's a good time to take advantage of some of these offers, considering the pullback that we have seen in prices of gold and silver. It's not financial advice, but I view these pullbacks as a buying opportunity, and you can buy your gold and silver at sdbullion.com. Right now, new customers can get gold or silver at spot by visiting sdbullion.com/new. But, not everybody's buying their gold there. Apparently, Costco has been selling gold bars, and they have sparked what has been described as a frenzy. We've seen Costco selling out of gold bars very rapidly as soon as they link these. Now, someone asked in the chat what the premium was on the gold bars at Costco. I'm not sure. I guess they're selling these PAMP bars in assay. I think that there was another version of an assayed silver bar that they were selling as well. It's probably not a bad premium. I mean, Costco tends to have good prices on these things. The interesting thing about this to me, though, is that the flurry of attention this story has received in the mainstream media, which, I think there's something we can learn there, something we can glean about where things are headed, that people are starting to pay attention to gold. Now, I do want to just take a break real quick. We've got 36 likes on this video, 205 people watching. I want to say a huge thank you to everybody who has smashed that like button and subscribed to the channel and tuned in today. If you don't mind, let's see if we can get it to 100. I would really appreciate that. It helps get this information out there, and I think that this is something that people need to hear, because we're being told by the mainstream that everything is just fine in this economy, but they don't mention that banks are continuing to use the Fed's emergency credit facility at a record level, more than they were using it in March. This is something that we all need to be paying attention to. I see the likes ticking up there. Thank all of you very much. Thank you all very much. Okay, so Costco sold out of these very quickly. I guess they were only available on the website. You got to be a member to buy them, so I don't know what the premium is. I'm not a Costco member, but the thing is that they sold out so quickly. I think some people said they were kind of buying them as a novelty. Other people obviously understand the value of gold, that the plan is to devalue the currency, and gold is a safe haven to protect your purchasing power from that. Now, the dollar and gold, they do kind of trade inversely to one another, but it's not a perfect thing. So, when we see these pullbacks, I view it again as a buying opportunity, because when you look at the numbers, the massive debts here in the US, it's only payable with devalued currency. That's how I see it. And, I think that we're probably going to see a significant devaluation when the banks begin to fail, or whatever breaks first. The interest on the national debt is spiking, but the thing is that the government can always just borrow more money. I mean, they can just sell more treasuries. Yes, it's true, if the interest rates spike up, then their interest service will continue to, or the interest cost will continue to go higher. But ultimately, they have the Fed backstopping them. The banks, on the other hand, even though it's a rigged financial system, I mean, the derivatives, the amount of fractional reserve banking, the expansion of the money supply is incredible. Banks still are subject to some financial forces. They still have a balance sheet that they have to balance. It's not quite the scenario for the federal government. But yeah, it is interesting to hear that they sold out quickly. Now, I don't know how many bars they had. I guess Costco sells jewelry, so this is sort of an unusual one-off for them. Limit 2 per membership too, by the way, so it probably was a good deal. But the thing I kind of take away from this is I believe that gold and silver, you're going to see more of this enter the mainstream as it becomes clear that we're headed towards a massive currency debasement. This sort of thing has happened before in the world. It's not the first time. And time again, folks go back to the precious metals. If you go to Venezuela, if you go to Zimbabwe, if you go to Weimar, Germany, all of these examples of hyperinflations, what's the currency that folks go back to? Well, in some cases, they go to the US dollar. Back during the Weimar hyperinflation, the dollar was still backed by gold. And even in the Venezuelan hyperinflation, some folks, in the black market there were conducting their trades in US dollars. But my question for you, and I'd be interested if you have some thoughts on this, put it in the chat. What do people default back to when it's the dollar that is the currency that is being hyperinflated and destroyed, right? Because there's no alternative world currency. I mean, what are people going to do? They're going to get an IMF SDR? Maybe. I mean, I have a hard time believing that all of these fiat currencies aren't going to be devalued more or less simultaneously. It's a race to the bottom. So I really expect folks will go back to gold and silver. It might start with gold. I think gold really has more of the public's attention. I think that's probably why gold has outperformed silver recently. But when it really comes down to it, silver was used as the common currency for the whole world pretty much exclusively. I mean, sure, some folks would use gold to settle large trades. Merchants of some sort might have used gold back in the day. But, for doing your shopping, going and buying groceries, doing trade at the market, etc., for a huge chunk of human history, human modern history, going back to, after we got out of the Neolithic age, it was silver. You can go back 3,500 years and they've got silver shekels. You can go back a couple hundred years and you've got Vikings sailing around trading with hack silver. You can go back to the colonial times in America. It was Spanish pieces of eight that were basically the world reserve currency at that time. But silver has been the money for a long time. And, we've very much lost touch with that. If you talk to most people about silver, I mean, they'll say, what, like silverware? But, the monetary characteristics of gold and silver have been propagandized out of us. And yet, on some level, you look at what they do with the coinage. Like, for example, with U.S. coinage, I don't have any junk silver in front of me here, but, junk silver, it used to be 90, sorry, people get mad when I say junk silver, constitutional silver, whatever. I mean, that's the term that I was introduced to this stuff as, so bear with me. But when you look at something like 90% silver coins, and then you look at, the clad counterparts that they have today, they look very similar because they take copper tokens now and they coat them in nickel to make them look like silver. Now, why do they do that? It's because people recognize silver as money. I think that this story, which has really made its way around the internet. I've seen it posted on many outlets. People are fascinated by this, but gold and silver are going to have a resurgence in the minds of the American people as we see this crisis play out. And I think that the demand for them will skyrocket. Now, we're going to take a little bit of a turn here in today's live stream, and I just want to remind all of you. It's like Lynette Zhang told me in the interview we did the other day. And if you haven't watched that yet, I recommend you go check it out. It was a good conversation. But she reminds us that there's more to prepping than just stacking gold and silver. I mean, this stuff is important. Don't get me wrong. I think if you want to maintain your purchasing power and get assets outside of this collapsing financial system, gold and silver really are your best bet. That's my personal belief. But you do need to have things like food and security and water and all those things. And part of the reason for that is that society is going to get a lot less polite and a lot less peaceful as this collapse plays out. I mean, this is a story from a local news affiliate from Philadelphia from just the other day. 61 arrested following 2 nights of looting in Philadelphia. Now, I guess there was a protest of some sort, and it sounds like the people who were peacefully protesting, they may not have been involved with the looting, but there were a lot of people who took advantage of this disruption to start smashing stores and robbing and looting. And, as the economy declines, we know that consumers, for example, let's take the recent GDP revision. Yesterday, consumer spending was revised down from the initial estimate of up 1.7% to 0.8%. So we saw a huge decline in the consumer's ability to spend. Of course, this is a revised number because the first number we got was cooked. Hey, we are almost, by the way, at 100 likes. I would love it if we could hit 100 likes before we end the live stream. 13 away, 208 of you watching, just saying. Do me a favor, hit that like button. Appreciate it. Do everybody a favor and help spread this information. So we're going to continue to see society becoming much less peaceful as time goes on. So if you're somebody who has hard assets, if you're somebody who's preparing, if you've got food, if you've got water, if you've got gold and silver, you're going to need the means to protect that self. And that can mean a variety of things. There's the Bill of Rights and there's the second one and all that. If you're in the U.S., that's probably the way to go. I don't want to get the video demonetized, so I won't say much more than that. But, you also got to be training. You also have to be getting prepared mentally for that sort of thing. And I just want to remind everybody that that is the reality, because if you're following this channel and you're getting prepared, you're going to find yourself in a position where, you're going to be one of the few people who has your purchasing power maintained. Trombone Music says, why is silver falling? Well, I believe it's because the financial system is collapsing, Trombone Music. If you want my honest take, I mean, we've got just about everything selling off today. We kind of started off the live stream, but we can get an updated view. It's the kind of the fun part about doing a live stream is we can look at things in real time. I mean, look, Every major index is falling today. They started off in the green. There's a little bit of hope there. Hey, maybe a relief rally. Nope, don't think so. The Fed is hiking rates. Inflation is going to continue to run out of control. The reason why is it's not the fact that the Fed hasn't, hiked rates high enough yet. It's just because this. I mean, if you want to know why inflation is going to run out of control, you don't need to look too much further than this. It's the fact that we're engaging in massive money printing and deficit spending. We're borrowing money from the future and spending it into the now. And that is going to drive up prices. Also, the economy is being gutted. Why gold is falling? Same reason. Same reason. Everything is going to be selling off here in the near future. That's just my forecast. I don't have a crystal ball. Again, timing things is difficult, but it's starting to look like this liquidity crisis, this crisis of debt selling off and spiking interest rates. I think it's really finally beginning to dawn on the market what this means. And the one thing I think that markets haven't realized yet is that, yeah, the Fed is going to keep rates higher than longer. I mean, they told us that with the dot plot that they released at the last FOMC meeting. But inflation is going to continue to rise. That's what markets don't understand. That's what markets don't get. They are not going to be able to bring inflation under control because of this. You cannot spend huge amounts of money, trillions of dollars, from the future into the now and not experience inflation. And ultimately, all of that debt is going to have to be monetized by the Federal Reserve. They are going to print their way out of this. That is what governments do, corrupt governments, throughout history when they spend far more than they can by buying votes. And, it's sort of the terminal phase of a democracy. Unfortunately, that is what we are headed to here. And, it doesn't mean that it's all doom and gloom. It's really not. There's the seasons to things, folks. There's spring, summer, winter, fall. We're just happen to be entering into a winter right now. And so it's time to, tighten your belts, save money. I believe it's good to have cash in case we do get some kind of a major pan sell-off. There will be opportunities out there. I don't think physical silver and gold necessarily will be the things that go on sale when everything sells off. I do think paper, gold, and silver are going to drop. But one thing I envision could happen is that we could see premiums explode. I mean, just look at what happened in March when we had the banking crisis kick off. We saw premiums and wait times for physical metal explode to record highs. I mean, junk silver was trading for something like 60% over spot. American Silver Eagles were trading for 100 times over, or not 100 times, that would be interesting, maybe something to come, 100% over spot. Got to be careful on these live streams. You misspeak and I'll be pilloried in the comments for that kind of a comment. By the way, we have hit 100 likes, so a huge shout out, thank you to everybody watching. That is awesome. I'm so happy to hit that. I really just can't tell you all enough how much I appreciate all of you tuning into these live streams and being part of this community. So yeah, this guarantees higher inflation. Will we see a sell-off in things? I believe so. I will be viewing those as a pullback, especially if we're getting a pullback in the spot price and the premiums aren't exploding. To review, the Bank Term Funding Program is at a record high. Rates continue to move up. So just get prepared, folks, and don't neglect those other elements of preparedness. Don't neglect security. Don't neglect food. Now, it's true, you can't eat gold and silver. And I know, colloidal silver, sure, you can, ingest this stuff. It's non-toxic and it may be beneficial or it might turn you blue like a Smurf. I don't know. I haven't personally ingested colloidal silver. Although, there is Silver Botanicals. We still have the link down in the comments to Silver Botanicals. They make some pretty amazing personal hygiene products with colloidal silver. I like their mouthwash and their deodorant and some other things. So, silver isn't toxic. You can use coupon code STACKER to save 10% off your order with them, by the way. But you can't eat this stuff, and you do need to make sure that you have other things. I think food is probably one of the biggest things that you need to take care of because you don't want to be forced to liquidate this stuff for essentials at a time that isn't of your choosing. You want to be a strong hand. It's the same reason why I advocate having an emergency fund, so you're never forced to liquidate your gold and silver for an unforeseen expense. Gold and silver are a savings account, but they're a very long-term savings account. But when you see stories like this about the looting in Philadelphia and the continued degeneration of our society, you need to be taking steps to protect yourself as well, not just from the devaluation of your currency. And yeah, that's pretty much it for today's live stream, everybody. Get prepared. There is a crisis around the corner. Trombone Music MS. Okay, we'll take a few questions here before we wrap things up. It says, what is silver's true price without price suppression? Hard to say. Hard to say. I will tell you that if you adjust silver's previous high from 1980 for inflation, just using the CPI, which understates inflation, you do get a price of around 200 bucks. Now, I'm not saying that that's the, true market price for silver or anything like that. If you were to take, the amount of silver out there and just divide up the M2 money supply by it, it would also give you a shockingly high number. But I do believe that the fair price would be significantly higher than it is today, multiples of its current price. And I do believe that we will find out what that fair market price is without paper suppression, possibly in the very near future. Because here's the thing, if you see a flight into physical metal and premiums explode and supply dries up, yeah, you might see folks selling paper silver instruments like ETFs and futures contracts, but the paper price, the spot price, which you got to remember, that's just the price of a futures contract, a derivative of silver, may become irrelevant. And at that point, price suppression will no longer be a thing. And price suppression is one of these things that people get hung up on. They get really upset about, oh, they're driving the price down. Maybe they are. We know that JP Morgan, their trading desk, some of those traders recently were convicted of spoofing the gold and silver markets. So we know manipulation occurs. That's a fact. They've paid, huge fines for this behavior. But to the extent that silver manipulation keeps the price artificially low, that will ultimately lead to a shortage of this stuff. You got to keep that in mind. If the price is kept artificially low, then there will be no incentive to produce it, or at least the incentive to produce it will be reduced, and you will eventually see shortages of the physical. I mean, that's the problem with using a paper instrument to manipulate a physical industrial metal, that the uses for are increasing and the consumption of is increasing. Yeah, people are asking where the best deals on gold and silver are right now. You won't beat ST Bullion right now. If you want to find out what the best deal is right now, this is just my opinion, of course. I think this is one of the best right now. $10 rolls of silver dollars for $18.30 per $1 face, or you can get the $10 roll for $183, any quantity. So you don't need to buy, thousands and thousands of dollars of bullion. You can get a couple of these rolls. You get three of them, you'll hit the free shipping on SD Bullion. So yeah, this would be what I would look at stacking right now for silver. Also because, the junk silver, they're not making it anymore, folks. They haven't made it since 1964. There's not that much out of there. And the half dollars, one of the things we saw in March was the premium shot up on junk silver in a huge way, but they shot up even more on half dollars than they did on quarters or dimes. So that's why I really like half dollars. I think it's a sign that there's a lot fewer of these out there. I mean, right now, look at that, 329 over spot, and I believe that is based on a per ounce price. The premiums on these was like 60% in March at its peak. And you also couldn't find it anywhere. It was out of supply. I mean, even if you wanted to pay the high prices, just nobody had it. It was out of stock everywhere. I guess some local coin shops might have had it. I don't have a really good local coin shop really anywhere near me, so I tend to just use the online dealers like SD Bullion. And this is where I think the best deal is right now, personally. For gold, you might look at, they've got some fractional gold on sale. They had that 72-hour sale where they had an ounce of gold for 29 bucks over spot. Anybody who managed to take advantage of that right at the end of the sale when gold had pulled back, I think there even might have been a brief window where you could get an ounce of gold for under $1,900. And that's something, that's incredible. That's a very good price for an ounce of gold. But look, I don't worry too much about, yeah, I like to buy after there's a pullback, obviously. It's nice to buy things when they're cheap. That's why I don't really get upset when I see the price fall. But I don't get too hung up on it. I try to dollar cost average, get into hard assets slowly over time, keep some dry powder, and get ready for what's coming. Because I really think that there's going to be a lot of opportunities for folks who have real money when the crap hits the fan. And that's coming soon. So that's it for today, everybody. Thanks for watching. Stay safe, and happy stacking. And I will catch you next time. Smart Silver Stacker out.